Hi, welcome to this video today, which is all about a frequently asked question online, which is the best way to trade the Forex market? Should you use a technical analysis or fundamental analysis? Which should you base your strategy upon? Now, most beginners who come in the markets want to trade purely technically. That's the choice of most retail traders, and in my view, it's the wrong choice because technical analysis has such severe limitations, which I'll go through in a moment. Now, fundamental analysis does have big advantages, but also limitations as well. My own view is the best way to trade the Forex markets is to use sentiment analysis. You can combine the best of technical trading with the best of studying the fundamentals to judge and trade sentiment. Now, if you do this, you'll be trading like most of the top traders in the world. They're mostly sentiment traders. Now, in terms of learning to be a sentiment trader and the advantages, we're going to go and take a look at them right now. Just go to a storyboard and we're going to go through all these points in more detail. All right, let's first of all take a look at why technical analysis is the choice of most retail traders. And in terms of why, basically it's because it's simple. You just follow price action, look for high odds trade setups, or you follow patterns and look for them to repeat going forwards. And you use good money management, cut your losers, run your winners, you'll make consistent profits longer term. That's the story that most traders believe about technical analysis, but it's not true. You'll see brokers obviously in favor of technical analysis, but why wouldn't they be? They just want you to trade. They don't care if you make money or not. Then there's the vast army of educators showing you how easy it is to make money with technical analysis going backwards in hindsight. Okay, you'll never see them give their entry, stop and target going forwards in the real world because they know what they're teaching doesn't work, but they know that the illusion of technical analysis working will fool the retail trader. So why doesn't it work? Well, you've got to keep in mind that a chart looks orderly going backwards. Okay, and you will see the various chart formations, like head and shoulders, tops, bottoms, wedges, triangles, Gartley patterns, etc. But they formed randomly at the time. They're only looking orderly after the event. This is called the clustering illusion. And the natural human tendency to look for order. Okay, it's been proved. You can take any chart formation you want, test it over the longer term, and it's no better than random. And this has been done in various tests. Okay, so you'd be better off flipping a coin basically. Now, in terms of another core belief of technical analysis is that all fundamentals are discounted in the price, so all you do is follow price action. But the fact is all fundamentals are not discounted instantly in the price. Okay, this is famously proved by George Soros. So in terms of price action traders, they're not seeing the big picture. Okay, let's give an example. Let's say you have a bullish news event, okay, and traders buy on it. Is that news event now discounted in the price? No, because the traders who might have bought on the bullish news event will have profit. They might decide to buy more. Then you might have other traders looking at the price action going up, fear missing out, so they want to get in on the action. So the fundamentals are not discounted in the price because traders have biases and will react to them. Now, in terms of point number 3, you can't establish directional bias from technicals. You can't decide if a trend is about to turn just from technicals or how far a trend might run. Okay, you need to know the fundamentals and sentiment behind the chart. So what technical traders tend to find is they can't catch the big turning points, okay? And even worse, they can't hold the big trends because as soon as they've got some profit, they get nervous. So they'll either end up snatching it or moving their stop too close within market noise, which is really high in today's markets, and getting bumped out of the trade. You cannot decide how far a trend might run from technicals. So you're really struggling if you're going to be a technical trader. Now, I will say the technical trading doesn't work today. It did work in the past, yeah, probably 30 years ago when you had really, really smooth trends, okay? Basic, simple technical analysis did, but no longer because the markets are just so noisy. Now, in terms of fundamental analysis, the actual chart itself comes from the fundamentals and the trader sentiment towards those fundamentals. Okay, now in terms of the big fundamentals, they will rule the long term. The big economic data will rule, but in the short term, you will get price spikes as sentiment drives prices too far to the upside or too far to the downside. So actually trading purely on the big fundamentals is difficult. And you've got to have really wide stop losses, okay? So really looking at the sentiment towards the fundamentals is the key, okay? Now, in terms of this, you don't need to know anything about economics or anything like that. What you do is you look at the fundamentals and you see if traders are too bullish or too bearish towards them, okay? And they'll very often, anticipate things happening that aren't going to happen. And if you study sentiment, you can basically decide directional bias. So you get directional bias of maybe a short-term correction or big trend forming. And once you've got that directional bias, then you can just manage with technicals. And technicals can then be very, very effective because you postulate how far a trend might run, which will help you with your stop loss placement. You'll tend to use big levels in terms of the technicals and very simple technical analysis, not patterns, okay? And you won't be tempted to look too far left on the chart. You'll be looking at the here and now, so to speak. Now, in terms of sentiment analysis, is the choice of the world's top traders, the overwhelming choice. If they're using it, then that is a good reason for you to use it. A lot of traders think, well, that's too complicated. No, it's not. Yeah, sentiment analysis is just practice. And your technicals, very, very simple. And got plenty of videos up on studying sentiment and judging it and using it with simple technical analysis on our channel, so you can check them out. But don't go for a pure technical approach. It will not make you big money. Also, in terms of big fundamentals, just studying the economic data and looking really at the longer term and ignoring those sentiment spikes in between, no, I don't think that's a good idea either. Markets don't move to just economic data, do they? They move to the sentiment of traders towards that data. That is what you've got to study to get your directional bias. Then you can manage with technicals. Then you can make consistent profits from the Forex markets. Right, hope you found the video useful. Thank you very much for watching me. As usual, take care. Have a good day.